Hey guys, it's Peter Cunha, your New Jersey real estate giant, broker, owner of Open Doors, and I am super excited. I am with Scott Stanford today. This is a rare one for me where I can say four generations
That's
of
right. That's right.
Stanford agency insurance. Scott, welcome.
Thank you. Thank you very much. I'm glad to be here.
Hey, Scott, you and I were just talking off camera for a little bit. You have we were talking about family and structure and everything. I jokingly say it's fourth generation because you mentioned you had two daughters, and how's
Yep.
it looking up for fifth generation?
Yeah, I don't know about that. I think, as we talked about, yeah, my daughters have chosen a different route. They wanted to live in the city and do the big city life. So maybe down the road a piece, I think maybe one of my daughters will, as she settles into the suburbs, and come back. But
They always do, and I can appreciate you saying that because I also was looking for that city life when I was a youngster, and
yep,
inevitably, the older I get, the less I want that city life. It's nice to visit, and
that's right. Exactly. It's nice to get out too. That's right.
yeah. So, yeah, I think one of the fun things is you've been really helpful with just helping me evaluate a lot of properties, typically in what I would consider more complex areas that possibly require stuff
Mhm.
that's outside of home insurance. If you want to talk about how you calculate rates, or how you guys come up with valuations on properties to insure.
Sure. Yeah. Yeah. The formula, there's no formula per se. I mean, people always say, oh, it's so much per square foot to build a house. That is true. Although when someone calls us and says looking for insurance, we do multiple background checks as far as we'll check property tax records. We'll check Zillow or realtor.com, find out as much as we can about the house. Because on the average consumer, I'll say, how many square feet is your house? I don't know. Consumers don't know that. So we then work out estimators. Most of the insurance companies have some sort of a replacement cost estimator built in that we can utilize, and we come up with a rough number. One of the biggest problems we're having is the customer says, "Well, my house is only worth $500,000 if I sold it, or whatever number it might be. Why are you saying it's going to cost $650 to rebuild it?" Well, because that's what it costs to rebuild your home. If your house were to burn down, let's say 50% or 55%. Then the home gets condemned. The insurance company then has to pay for the excavation and demolition of what's left of the house, removing debris, clearing the lot, getting it all prepped for rebuilding, applying for the permits, all that. In addition to any kind of ordinance changes, any code changes, they might have to pay for some upcharges in that. So there's a lot that goes into it. The soft costs, in addition to what it costs to actually come in and swing a hammer and cut the lumber. So that's why, and with the market the way it is, and the housing market cost of building is gone through the roof. That's one of the biggest struggles we're facing these days. Is we're getting phone calls all the time from customers saying, "Why did my insurance go up so much?" Well, yeah, the rate might have gone up a little bit, 10%, but your replacement value went up 30%. So it's difficult. I feel bad for insurance companies in respect that. If your home renewed in January 1st and they gave you a renewal offer and said it's going to cost $650 to rebuild your house, well, that was January 1st. Let's say the home burns down in the end of October. 10, 11 months later, the building costs might have changed dramatically, and yet the insurance company has pledged that, okay, we feel that you have enough coverage on January 1st, so we're going to cover you for what it costs to rebuild on November 1st or end of October. So it's tough for insurance companies to find that moving target as where the replacement cost should be. So that's one of the biggest struggles we're facing. And because of the storms that the east coast of the country has had, particularly in Florida, where most insurance company has or have had an exposure, it's affected the bottom line and their reinsurance. So it's caused companies to file for rate increases. But it's the kind of a double whammy.
Right. No, and that's it's such an interesting part because we were talking about most people or most consumers, that they're not dialed into their insurance. I know I'm not dialed into my insurance when it comes to interest rates on a house,
Mhm.
like because I do it nonstop, right? I know to keep surveys. Like I'm dealing with an issue right now where it's like, yeah, had we had a survey, we would have been aware of an easement, right? But we didn't
Right.
have a survey. It was bought, the house was bought 20 years ago, and
Mhm.
it's like not that anybody did anything wrong. We just didn't know, and now we have to deal with it at the
Sure.
last hour. And unfortunately, the deal could be in jeopardy, and nobody wins.
Yeah. Yeah.
Um,
Mhm.
so one of these things where how do does that affect the value of a property when you're looking at it? When you see easements like that, since we're talking about it,
Not really, because rarely when there's an easement, it's typically has no permanent structures on it.
right?
Like you can't build in an easement, um, unless the easement was somehow determined after the building was there. But typically, you can't build in an easement. So there's nothing that the insurance would cover, because we're not covering the vacant land for property insurance. We're covering it for liability. Um, so the only added exposure for an insurance company potentially could be if there's a conservation easement or something where technically anyone could walk through it, any member of the public. Your homeowner's insurance is covering up the liability if someone were to slip and fall, but that's kind of an extreme. I wouldn't really consider that.
All right.
Um, but again, yeah, that's my agency's specialties. We're not just we're not a toll free number. You call up, we answer. Typically, if there's nobody available to grab the line at that moment, it bounces over to one of our cell phones. So we're usually there to answer, and we're a first name basis. We're not a number. So we act as a resource to our clients. Kind of the boutique agency attitude.
Yeah, and Scott, yeah, here's it. People that don't know Scott are kind of why such a big fan is the amount of stuff that you do to give back, right?
Mhm.
You mentioned you're on some of these boards, just kind of
Right.
the standards in New Jersey. If you want to just kind of share some information.
Yeah. Yep. Yeah, I've been in the business now for 35 plus years. And about 10 years in, I realized that there's a whole lot in this industry beyond what happens in my four walls of my office. So I started reaching out and getting involved with some of the trade associations. Like there's one in particular, the Independent Insurance Agents and Brokers of America. So I represented some agents on a local level. I sat on a local board, and then eventually I moved up and I sat on the state board, which I've been on now for 20 years plus. And that led me to the national board of that. So I represented New Jersey on the national level of the Big I, as this organization's called. And the purpose of that is to represent agents and the industry for the consumers. We advocate for the consumer. So the group has a very active lobbying group. I go to Trenton. I go to Trenton a couple times a year, and I go to Washington at least once a year for a few days, and we meet with the legislators. We go to Capitol Hill, and we get appointments with all the different legislators throughout New Jersey, the congressmen and senators. And I feel that it's really opened up my eyes to what the industry is beyond what I knew about within my four walls. It's given me a lot of different insurance companies that I can work with. It's introduced me to other companies that I would not have known perhaps, and that in turn helps my clients. I think right now probably all the companies that I work with are because of a direct or indirect contact from my association with this group. So
Right.
I think it's really important for a person, no matter what industry they're in, whether they're a realtor like you or an insurance agent, they need to get out of the office, get involved in a trade association or something else that serves their industry, and learn about what's going on beyond what you're doing. Because you might learn that the guy down the street is doing X and you didn't know about that. And that's something that really might benefit your clients.
Right. I so strongly believe in everything that you're saying, like on a on such a deep level, right? Because I always love when people are like, "Oh, you're a realtor," and I'm like, "Well, yeah, you could put me in that box." Like checking off one of the many things that we do.
Right.
You know, tell us about what kind of insurance that you sell specifically. Is it just kind of homeowners, or like
Yeah.
just go through it?
Yeah. I'm glad you said that. I'm kind of backing into it. We're halfway through the discussion. My agency, and I'm the fourth generation to enter this agency. It was my great grandfather started it. And we really predominantly sell the property and casualty insurance. So that's the homeowners, the auto, the umbrella insurance, the business insurance, the professional liability. We'll do some life and health, excuse me. But that's not the thrust of our business. We market mostly for the property and casualty. And that's where we feel, because, in the life insurance area, for instance, you sell a policy, you don't see that customer again. Somebody from the family calls and says they passed, or their policy is expiring 10 years down the road, and they want to re-up their policy. And the business we're in, we're working with the client year after year. We're there for them. That's what I say. The clients in my office, if somebody were to call, I'll be like, "Oh yeah, John Jones. Yeah, I haven't heard from him in about 6 years, but I know about him because I work with his policy and his exposures every year."
Right. Tremendous value there. What are some myths that you could dispel as well when it comes to the insurance thing? I think I threw one at you the other day where it's like, if you get into a car accident, switch insurance companies or something.
Well, that's true. That is one. People always say, "Well, if I have an accident, I'll just switch insurance companies, and I won't get charged for the accident." Or customers will call and I'll ask them about their driving record, and when I'm giving them a quote, and they'll mention nothing, and then I do the background checks, and I'll be like, "Well, what about this accident, that accident?" "Well, I was living in Delaware at the time." "Well, yeah, but it's still your accident. it's still applicable." So that's one of the bigger myths. And with regards to auto insurance, I think the biggest myth is a customer will slide on ice during the wintertime in their car and they hit a guardrail, let's say, or a tree. So there's no damage to a tree. They bashed up their car some, and they'll be like, "Well, that's not chargeable." No, it is. But no, that's no fault insurance. I said, well, first of all, it is you are responsible because you should be in control of your vehicle at all times. In addition to that, no fault insurance, which is a common phrase you hear through the industry, has nothing to do with damage to your vehicle. It pertains to your injuries. So personal injury protection, every policy has to some extent. So if you're hurt in an accident, you go back to your own policy for your medical coverage, regardless of who is driving or who is at fault. An example, if I'm driving with you, Peter, in your car, and you get rear-ended by somebody, well, I don't go to use my medical injuries. I don't go to the person that hits you for my medical injuries. I go back to my own policy. So that's no fault insurance.
Right.
So that's probably in the auto insurance side, those are the biggest myths. Your violations and your driving experience follows you from state to state and company to company.
Sure.
And then as far as the no fault, the insurance rates for auto insurance are made up of a lot of factors. Biggest one really these days is credit score. Every company has what they call an insurance financial score, which is a formula, fancy wording for credit score. Your credit score is part of that formula in addition to your driving record, your driving history. How long have you been with the previous company? Are you jumping from company to company every year? Or are you saying, okay, I'm riding the wave with this company? Your score goes up a little bit if you're consistent with one company. So.
Right. No, and it's like, this is all like, I would never think of my credit score for my
Right.
car insurance or anything like that. Oh, man, it's on my tongue. I wanted to ask you something. It's when it comes to the homeowners insurance and being underinsured,
Mm-hmm.
we were talking about this, right? People are trying to save money wherever they can, especially, call it the global recession, call it flag station, flag,
Yep.
whatever it
Yep.
is. What should people be aware of when it comes to the homeowners insurance part of their policy? Typically when you and I get together, it's because somebody's buying a house, but we're talking about people that, okay, the market's up 25 to 30% in the last 2 years. You bought house X for 500, you've have insurance coverage for 500. Now your house is worth 6.
Yeah. That's probably the hardest thing we face in the industry is getting the properties insured to a proper value. And consumers don't understand that. Again, they'll be like, oh, I don't want to insure my house more than $400,000 or whatever it might be. And I'm like, well, I'm sorry, you can't do that. And of course, which is usually a very agitated conversation. But an insurance policy is a legal contract between the insurance company and the consumer. Right. So the insurance company says that, okay, based on the information you provided and our inspections, we feel your house is going to cost $650,000 to rebuild. So we're saying that if you agree to purchase $650,000 of insurance and pay that premium, at the time of loss, we'll pay to rebuild your house, even if it goes a little beyond that. So when a consumer says, I only want to carry $400,000, it's not an option for us, unless we went to some of the substandard markets like a Lloyd's of London. If some of them will do that and do it at what they call an actual cash value basis, which is not really advisable because you pay a higher price and you basically are going to pay the same or more and get less coverage. But that's one of the biggest obstacles we face is that with the customer. If a customer really is looking to save money on their premium, again, that's where you would have the advantage of an agent. They can talk to us and say, Scott, how can I cut back my premium? All right, I understand that you've just explained to me that I need to carry $650,000 of coverage, but what else can I do to bring that premium down? Well, policies have what they call endorsements on them. There are added coverages that they might be adding. Every company has a fancy endorsement. I call it a bells and whistles endorsement. It might give you extra coverage for money that's in the house if it's broken into. It might give you extra coverage for jewelry. There's liability coverage on the policy. Typically, we don't sell less than $500,000 of liability, meaning if someone were to come on the property and slip and fall, for instance. But there are options in there, or even raise your deductible. Policies have a deductible most times of $500 or $1,000. Well, consider raising it to $2,000. Insurance, particularly homeowners insurance, is really designed and developed to be catastrophic loss coverage, not to cover your one section of chain link fence that fell down for $300 and your deductible is $250. That's not what insurance is designed for. So that's the biggest way I can tell customers is talk to us. We'll see what coverages are in your policy that you might be able to save on, but you're not going to be able to save on reducing your amount of coverage unless your home is overinsured in the first place, which is not all that common.
Right. And I just wanted, listen, I know that we're limited on time here, but one of the things that, I really kind of, it's the independent brokerage model where you can shop around and save money and get the best, it's not necessarily always about saving money. You might still pay the same amount, but get better coverage. It's kind of like the big broker chains where, it's mandatory, we were talking about this. One of the big ones that always comes up is the flood insurance. And, you get to shop it around and it's not just the NFIP coverage. And sometimes that's, you mentioned sometimes it's better, but most of the times it's not. So, the reason why I'm partnering with you is you get my clients the best coverage and, it's a holistic process.
Yeah, no, it is. I mean, and yeah, I'm an independent agent. So independent agents, and just for the 15-second education of whoever's listening to this, if you were to go to, and no disrespect to them, but if you were to go to State Farm or Allstate or Liberty Mutual agents, they can only sell their product. They have an exclusive agreement with that company. Right. We're an independent agent, so we contract with multiple insurance companies. So what that does, again, better to serve our clients. We give them options. We give them choice. I know that certain companies I work with will not write along the coast. I know others that only like to write along the coast. Some only want higher value homes. Some don't want to insure a home over $1 million. So I have choice to the consumer as to who's the best fit for your particular need.
And you make my life so much easier because I just put it in your hands. I know you always make me look good. So Scott, I appreciate your time and all this valuable information. So other than getting in touch with me, what's the best way to get in touch with you? Your phone number and your email address quickly.
Best way, you can always go to my website, stanfordagency.com, STAN like Nancy, FORD, agency.com. My email, scott@stanfordagency.com, or my direct line. My direct line is 908-899-0000. I'm there as a resource. Make use of me.
Yeah, we'll be posting all this information that you left. We'll put it in the description below. Scott, listen, it's always great having you in my corner. Like I said, people think I'm really smart, not because of what I do, but because of the people that I surround myself with.
Right. So it's all about.
You're certainly, thank you. You make my life that much better. So appreciate
my pleasure.
your time, and I can't wait to do this again. All right.
Sounds great. Thank you very much, Peter.